Welcome back to the Wall Street Podcast. Today we're taking a deep dive into a significant piece of research. It's a recent report from JPM Securities, China Company Limited.
That's right, released August 14th, 2025. It initiates coverage on China mobile tickers 90041HK and 60941CH.
And the rating?
Overweight. The core thesis? Well, it really boils down to China Mobile being the largest telco in China, offering both an attractive dividend yield and pretty sustainable profit growth potential.
Okay, so JP Morgan uses a specific structure, right? This CHBN framework.
Yes, CHBN. It stands for Customer, Home, Business, and New Markets. It's how they break down the operations, helps to see where the money's coming from and where the growth is.
Let's walk through those. Customer market first.
Right, the C. It's still the biggest piece, over 1 billion users, 54% of revenue. Now, ARPU, average revenue per user, did dip slightly, about 2% in Q1 2025.
A slight dip, okay.
But, growth in newer things like 5G new calling, that was up 12.6%, and mobile cloud storage up 19.7%. That helped offset it. Shows they're adapting.
Makes sense. And the H-home market?
Home market showed some really solid growth. Household broadband revenue climbed 10% in 2024.
10% is strong.
Yeah, it's now 16.1% of total revenue. And things like AI home security are adding value, pushing up the average revenue per household, not just basic internet anymore.
Moving to B business.
The business market, this is actually their fastest growing segment right now, up 8.8% in 2024, making up in 23.5% of revenue.
And the driver there?
China mobile cloud was huge. Revenue surged 20.4% to hit RMB 100 billion. And interestingly, GPU use really jumped after they launched DeepSeek.
Ah, the AI angle.
Exactly. Shows they're serious about leveraging AI within their enterprise cloud offerings.
Okay, finally on new markets. Seems smaller.
It is smaller, 5.1% of revenue currently, but still growing 8.7% in 2024. This is where they put things like international business, Migu video for digital content, Hibao mobile payments.
Sort of their innovation incubator.
Precisely. Plus strategic investments in AI and even 6G. Looking ahead.
All right, so with this diverse base, how does JP Morgan see them sustaining profit growth? What's the outlook?
The forecast is pretty steady. They project about a 2% revenue CAGR compound annual growth rate, and maybe more importantly, a 4% net profit CAGR from 2025 through 2027.
And how do they get there?
It's a mix. Stable traditional revenue, good growth from digital transformation like those cloud services, and crucially, CapEx optimization.
Right. The 5G spending peak is over.
Exactly. That peak investment is behind them. CapEx actually fell 9% in 2024, and they're guiding to another 8% reduction in 2025. That frees up capital.
Which leads nicely into the dividend discussion. You mentioned an attractive yield. What makes it stand out?
Well, China Mobile H is estimated to offer a 6% dividend yield for 2025. That's the highest among the big three Chinese telcos.
6% is definitely attractive in this environment.
It is. And it's supported by a few things. They expect a 7% dividend per share CAGR through 2027. There's a commitment to boost the payout ratio to over 75% by 2026.
75% payout. Okay.
Plus, they have a strong cash position. About 12% of market cap is cash, and that net profit growth we just talked about. It all supports the dividend story.
Of course, every analysis includes risks. What are the main concerns JP Morgan flagged?
They highlighted three main ones. First, the potential for U.S. investment restrictions. That's always a geopolitical factor to watch.
Understandable.
Second, a weaker economy. If consumer and business spending slows, telco services could feel it, even if they are somewhat defensive.
And the third?
Slower cloud revenue growth. If the macro environment weakens, or maybe new AI developments take longer to monetize, enterprise spending on cloud could soften. Those are the key watch points.
So thinking about the broader implications, for you, the listener, what does this all mean?
Well, it suggests continued stability and evolution in digital services. That focus on customer and home means reliable mobile and broadband, probably with more smart home stuff integrated.
Yeah, things we interact with daily.
And the business market growth points to more digital transformation across industries. Think cloud apps, private 5G. It affects how businesses operate and how services reach you. Telco is really foundational infrastructure.
Even in economic headwinds, these services are pretty essential. Staples, really.
Exactly. So this deep dive shows China Mobile in two lights: a key digital infrastructure player in China and potentially a compelling high-yield investment.
So as you watch the market, it's worth considering how this ongoing digital shift impacts not just companies like China Mobile, but your own everyday use of technology.